What is up, everybody? We're going to go over advanced price action in this specific video, and we're going to go over something called slips and reclaims. Some of you may have heard me talk about this. In fact, if you watch the Art of the Trade video, which is quite some time old now at this point, I talked about the statistical advantage of reclaims and slips. Now we're going to highlight that and just have a specialized video on that. This is one of the first videos where I'm actually talking about price action, legitimate reading price action as in bars or candles on a normal chart. Price action for me is excruciatingly important when it comes to building context, narrative, and execution. Just being able to read price action is like reading the words in the book. That's exactly what they are. They're words in a book. So for me, price action is so excruciatingly important, and we're finally going to start to talk about that. Now, I just want to talk about something here. This video will be put in the Fat Cat trading course modules. In case you don't know, I am been creating a free course on YouTube where I talk about my edge, all the components I use. I talk about mean reversions, volume profiles, gap jumps, market correlations. So when you guys see what you're going to see in this specific video, all those other components plug into it and it's viewed as one system, which I actually talk about in this video. I talk about how trading systems, it's important that you have an ecosystem of things that kind of coincide with each other, because what you're going to learn today is really awesome in my opinion. However, it is not, on its own, it's not going to be as powerful as it would be if you put it all together. And by the way, we're going to look at one of those trades. I believe it's this trade here and this trade here. We're going to look at those two trades in this specific example because it has to do with the slipping and the reclaiming. We're not going to look at this big-ass trade here. If you want to know more about that trade or all of these trades, you can watch my full-blown narration videos on my Ko-fi. So I'm going to plug something, guys. I've been getting a lot of questions about it. How does it work? And I just want to tell you how it's the best bang for the buck. So description, if you go in the description, there's a link to my Ko-fi page. I sell something called the Prep series. It's a monthly subscription, $133.33. Let me just show you how much shit you're actually getting. So I've been doing the math on this shit. There's over 50 hours of narration videos, okay? And this library is continuing to grow. There's 42 episodes, 50 hours. There's probably over 300 something trades that you guys can watch, because I didn't count trades on these earlier episodes, and then I'm like, I better fucking count them. So not only do we have narration episodes, we have prep where I prep before, like at the end of the night usually. So there's hundreds of hours of those. And then we have case study episodes, which are a little newer, where I do case studies on really big trades. There's 6 episodes currently totaling 4 hours. Let me show you how this works. I post things chronological order. So blue thumbnails will be narration episodes where I'm narrating through a session and telling you what I think as I'm placing trades and stuff. White thumbnails will be actual prep where I'm going and updating EV counts on levels, which there are some videos here, but I'll do a specialized video on that at some point in YouTube. And then we have the case studies and orange thumbnails, and then a narration episode, a prep episode, another case study. And then if you go down here, you can go to see all, and then it just, there's so many of them. There's fucking so many fucking episodes. It just it goes on, and these are long fucking episodes. This is actually a report card where I only have one report card episode up. where I hit a drawdown. Yes, I hit a drawdown, and I talk about what I'm doing to get out of these things. So we actually got really close to drawdown on Monday, recouped it as of this week. Prep, narration. You guys get the point, because in my opinion, when I share a lot of these things, that's the problem with courses, is it's like captured in a specific environment, and the environment is shifting a lot of the times. And what's cool is a lot of the stuff that I'm preaching and sharing, such as these older videos, like the gap jump episode, the volume profile stuff, the correlations. What's cool is like you get to see that stuff work in the future. Like you get to see me like use what I preach on a day-to-day basis for the most part. You know, sometimes I take off and I don't make an episode or whatever. However, I mean, for $133, fuckloads of footage, ongoing case studies. That's how I think it's best to learn a lot of this stuff, because no two trade is the same. There's a lot of similarities in these things. However, again, no two things are the same, but they kind of look the same, and finessing them and then just all this other shit. So that's what's cool. And another thing is, again, if you want to look at the big trade from today, I talk about something called a measured move, in that. So there was a good probability it was going to push really far. And I talk about that in a lot of stuff. And then I also talk about stuff called range stacking and just like badass edge I've not shared on YouTube yet. Not because I'm trying to keep it from you guys. It's just I don't have the time to do YouTube videos. I rather be helping the prep members by making content for them. Anyways, without further ado, let's jump into this. So let's talk about slips, okay? So this is the ES from today, October 18th. So what we got going on is the open is right here. Now, I know this is a lot of stuff, so what I'm going to do is filter out all the levels and everything, and I'll get right back to you. All right, guys, so here is our bare bones chart. I prefer bars. I prefer time. I don't like tick or volume or any of that. I just like it the way it is, price over time. That's just how it is for me. So what is slipping? Well, let's talk about a reclaim first, and we're going to look at a shitload of examples of reclaims. Okay, so I think it would help if we go to a 10-minute. All right, so this is a 10-minute chart, okay? So, well, the thing about reclaims and slips are they're fractal. Actually, a lot of what I do is fractal. In fact, a lot of everything that happens in the market is fractal. What we see happen on the higher time frame can and most likely does happen on the smaller time frames. So this is a 10-minute chart. Just so you know, this move from up here to down here is 295 fucking ticks. Okay. So we are in an environment where the market is extraordinarily choppy, as most of you probably know. And a lot of traders don't understand the concept of reclaims or slips. So you guys think we're breaking out. You guys think we're in a bull run, a bear run. And I see it in the Discord a lot, especially with traders who don't regularly consume my content. And you guys get fooled quite a bit about what's going on. And if you can just keep reclaiming and slipping in the forefront of your mind, you shouldn't get surprised when that big move you thought was happening reverses. So let's talk about reclaims. So a reclaim is essentially, let me get rid of this other chart here. So got rid of that big ass profile. So as you can see right here, we have this we have a range here, you know, and we do talk about ranges. That's one of the first things I talk about in the free course module. So we have a range, it blows out and it runs, right? And it goes about 150 fucking ticks. Well, here's the thing. And this works, and it's in ES and Q especially. When the market runs in one direction, there's a good chance they're going to take that run back. And as you can see, they don't take the entire run back. They take half of the run back in this example, but then they take it all the way back right here. Okay. So, however, as they were taking this original run back, and we'll go ahead and zoom in because this is very important shit to understand here. As they take this entire first leg up back, notice this. They put in a run here, and they kind of put in a run right here. What do? Well, they take this run back right here, and then they take this run back right here. But what did they just do? They put in another run right there. What are they probably going to do? I'm going to get rid of that. Well, they're probably going to eventually take it back. So let's continue to look at this. Oh, shit. They take it back, and then they put in another big-ass fucking run right there, right? So there's a big run right here. What do? They take that run back with another big run, but then they take that other run back. Okay? This is called reclaiming. Then they take this run back here, and then they kind of go sideways, and then they puke it slightly, taking some of this run back. Oh, shit. So there is a bit of a run here. They take that run back, then they take that run back. Then they run it up, and then they take that fucking run back. And then eventually, it walks its way down. Just so you guys know, I'm not cherry picking this shit. Let's just go anywhere on the fucking chart. Let's go the fuck, there's some bullshit over there. There you fucking go. All the way over here in August, right? They take this puke, but they don't take it back. Then they keep dropping it. And there's smaller little runs right here, okay? There's a run there. They take that back. There's a run here. They take that back, right? Let's zoom in. Then they take this little run right here back. Then they puke it up. They take that puke back. Then they puke up. Then they puke down, taking that puke down. And I think you guys are starting to get the point here. Puke. And then they run it up, but they don't take all the way back. They walk it up. Notice how they walk it up in this example. Notice how it gets walked up. The price chops its way back through. Okay? So when it runs real hard one way and runs back, they're probably going to keep trading through that section. All right? Look at this. You got a big fucking run right here as well. Right? Big run right here. They stay flat. They don't take that run back. They puke here. Then they start to chop it back up. Notice how the bars right here are bigger, fatter. They're chopping their way back up in that puke. So what they're doing, and I'm going to fucking switch positions here because I can't sit flat on my ass. They chop it back. So there's a good chance they may not run it down. Then they chop up here, and then they puke it up. So they're puking up into this prior run. Puke down, puke up, puke down. Taking back this prior run, puking it back up. Okay? Now they've taken back all this shit. But what do? What do they eventually do at this point? Okay? And if you can really comprehend this type of price action, then what you'll start to understand is where they might start building ranges. And if you understand where they're going to probably start to build future ranges, those initial moves are generally really fucking good. So notice how right here, I know it's like I expanded it out on the lines. Let's make it more vertical. Notice how they chop a lot of this reclaim, right? They chop, and then they chop right here as well. So they're chopping, and they're filling in these runs, okay? So this is very important to understand as I just spoon feed you these concepts a little bit at a time. Puke up, puke down. What do? Look at this. They start to chop in these puke zones, right? Look at these pukes right here. There's a puke here. There's a puke there. But look, they end up just doing this where they shimmy it back and forth, right? huge puke up. Look at this. And it goes from, it happens on the smallest of time frames to the biggest. Huge puke up, huge puke down. These are called reclaims. So what happens is if there's a really hard one-way run, they're probably going to take it back. And those of you who are part of the prep series, which it's more than prep at this point, what you guys will notice is I'll draw blue boxes like this, and I'll draw it on these reclaim zones. And I more so don't, and what I do is I draw them at the top of these ranges, at the bottom of this range, at the top of this range, at the bottom of this price action. I'm trying to capture areas where there's almost just this vertical look inside the price action, right? And then they puke it back through these other areas, further creating yet another bigger, more badass reclaim. So I would probably honestly pull it up to this point. So let's go ahead and just show you an example of how I would draw these for future, because what I know is like they're probably going to push it through again. Now, are they going to just puke it all the way through? No, sometimes they walk it through. Notice right here, they poke at it, they poke at it. Even there's a reclaim here, they take it back. Notice how they start to chop through it. This is exactly what I was talking about. They chop their way through it, and then they push it up. There's even these smaller reclaims right here. This right here, just so you know, is called a slip. All right. A slip is when there's a reclaim, and then they immediately take it back, but then they make it like a range. It becomes a range built off of a bunch of fucking reclaims. Those are called slips. And what happens is these slips tend to have very fast movements through the center, okay? So again, a reclaim is a one-way move, typically a really fast shove. I mean, there's another one over here as well, right? Again, this is the 10-minute chart, so there's another big-ass one right here, right? Look. And then I think you're getting the point at this point. What are they going to fucking do? They're going to take it back. They don't always take it back on another hard shove. Again, sometimes they walk it through. Notice in this blue box, though, which was a reclaim back here, notice how they like chop and go sideways. So this section's probably not going to reclaim again, but then again, they do kind of dump it through. So this shit is very fractal. You can see it on 3-second charts. That was a 10-minute. You can see it on a 30-second chart as well, right? You can see the shit on 30-second charts as well right here. Okay, so this is a huge reclaim in this section. It's not as noticeable on the 10-minute. Let's go to that section right there, right? So we're kind of looking at, you know, this area right here, if I'm not mistaken. We're looking at the time of, you know, 12:03. So let's go to 12:03 in the afternoon. Yeah, right in here. You can't really see it on this 10-minute. So, you know, we had been looking at a lot. It's right in this section. So it's not very notable on the 10-minute chart in this section. We obviously looked at 10-minute reclaims. However, if you zoom in to the 30-second, you can clearly see, and that's a big fucking move. I believe, if I'm not mistaken, that's about 50 ticks of movement, which is really good. That's about, that's a 107 tick move, right? So that's even bigger than what I thought. So this little area right here, you know, 100 and fucking, that's 59 ticks. My bad. So either way, it is, it's right here. We were looking at this section. Either way, it's kind of hard to see. You know, it's not as defined on the 10-minute. But even back here, it's reclaiming. So this is the bigger move. Even right here, it's reclaiming, but you can't really see it. Like in this section right here. Okay, so it is very fractal. And what I've noticed is that, like, over the years, I just struggled, more so during the Ukraine invasion around that time, is just like trades coming back. There was a period where I just kept having trades come back, trades come back, trades come back, trades come back. Then I started to realize that when there's a hard move, they take it back. They almost always fucking take it back, time and time again. Now, my theory on this is the liquidity isn't quite there. I've talked about this in other videos. The DOM is thinner than it's ever been. Well, it's been thinner in the past, but it's not what it was when I first started trading, and the volume is the same as when it used to be really thick, like 500 contracts per bid offer. Now it's like, what, 130 or some shit? The same amount of total daily volume comes in, so therefore the market chops a lot more in order for larger traders to get the same amount of volume in today that they used to be able to do years ago when it was thicker, because the liquidity is just not there. So therefore, my theory is that these reclaims are just, they're essentially, they take them back. I don't know what's going on with market makers pulling or some shit, but typically you get these fast movements through them, not always. So that's the thing. When the ES giveth, the ES taketh. And this is NQ as well. Hell, Russell is a different beast, and I fucking love Russell to death. However, Russell does the same thing. Russell is, well, we'll pull up a Russell 10-minute. Russell is a very goofy market, as you can see, putting in a shitload of reclaims and taking them back. So Russell, you can see them everywhere. They take it back all the time. So that's the thing. When you guys are in a trade and you're like, you think you have this big run and all that bullshit, you know, you're excited. You're like, oh, I have this big run. There's a good chance it might come back. Now, how do we know if it's not going to come back? Well, that's where you should watch the rest of the playlist and potentially subscribe to the coffee and look at the trade from 1018, part 3, and look at that 96 tick trade because in that specific example, I know it eventually does come back, right? So it eventually does bottom out here, and then it starts coming back up. However, combo stacks with high EV counts, range stacks, which is something I've yet to talk about on YouTube. I talk a lot about it in the prep series, which range stacking, in my opinion, is the meta right now. Understanding how that stuff works, understanding when ranges are going to break out and actually run versus actually coming back. Looking at high EV count gaps, looking at a series of high EV stuff and looking for potential combo runs, which I talk about in some of the case studies and the orange thumbnails, especially the more recent one, as of the making of this episode. That's how you know when the market may not come back and you may have a good run on your hands. So I have to look at a lot of other shit to know that the market may not come back. Again, we never know. Anything can fucking happen, right? However, there's a good probability it may not come back. So keep that in mind, unless you're really good at understanding price action and just being able to read this stuff like English, like how if you can look at a chart and just really understand what's happening in the price action, over time you'll start to realize it's not as random as you think. And it's really telling you what's going to go on and what could potentially happen. And at this point, to me, I can read it like it's English. Like I get what it's telling me. So be wary of when you're in a hard move, okay? So when it comes to a reclaim, there's a few things, and then we'll get into slips. There's a few things I don't really want. I don't want a reclaim on my backside. And you guys may have noticed this when you're trading, day trading or whatever. You see the market run really hard one direction, 3 points in the ES, however much that is in NQ. And then you buy it because you think this is it. And then all of a sudden it just reverses on you and stops you out. And then you fucking buy it or you sell it, go the other way, and then it reverses on you and stops you out again. Kind of like this shit. So what I'm saying is, if I want to go fucking short here, I don't want to be going short. Like, okay, let's actually put it like this. If I want to go short here, you know, I see it kind of ranging and stuff. I want to be very careful because there's a big reclaim right here. There's a big ass reclaim right here. So I don't really want to get short. Again, watch the range video and the course module. Because there's a reclaim behind me and they might fucking jack it back up. So I want to watch out. I'd rather be trading into a reclaim than it be behind me. Same thing with being up here. Like, okay, maybe it starts to chop ever so slightly. Right here, I wouldn't necessarily be wanting to get long with that reclaim on my ass in. Now, when would I want to actually do it? Today, this was a prime example. Notice how I drew this pennant thing from earlier in the session. What do? This is actually as prime as it gets. They reclaim up, they take the reclaim back. And then what does the market do? The price action gets progressively tighter. And what does it do from those other examples I've showed you? It fills in all this chopping right here, and this section, this range, is filling in this reclaim and this reclaim right here. Okay? So all that reclaim had been pretty much filled in. So therefore, they're not going to just jam it through that midpoint as easy. And notice how it actually created a fucking range too. Sometimes these reclaims will hint to you that there's a range. And the best trades are once, if you can identify a range, which is a big skill set, don't just be shooting at anything. And the two trades we're going to look at are me like, I take a long somewheres to fuck around here. I take a long here, and then we take a short up here. I don't write it all the way through. I write them, you know, not quite, you know, even halfway. I write them pretty good. You obviously see, you know, 23 and 27 ticks. So I identified what was happening pretty early on. So again, and I'll show you why, because we're going to progress into slipping. So again, hopefully you guys are understanding what a reclaim is. If there's a hard move, they're going to take it back. Now, what I would say is this is more so in the lines of slipping. So a reclaim is one hard move, and they haven't taken it back. Once they've taken it back, they've reclaimed it. So if this hard move has not been taken back yet, it is no longer, it's a reclaim. The moment they take it back, and then they start trading through it roughly a third time, it's now a slip, okay? So there's some really good slips over here. So what happens is, this is, you know, near the open, right? So the market opens over here. They kind of puke it down. There's a little bit of a reclaim. They put in a range. They puke it a little bit. They reclaim that. They puke, and then they take, you know, this prior reclaim back. Now, what I'm going to do at this point is understand that they are now creating a slip zone, a range. Okay, not all ranges are created equal. A slip, now the market usually, especially in Q, will be slipping on a 3-second chart all the time, and we're not going to go over really small time frame slips. There's some video buried in the coffee page. If you really go really far back, I have something called slip drills. It's buried in there somewhere. If you want to see it on a 3-second chart, it's in there. You're going to have to dig. The thumbnail and title should be there. Anyways, at this point, I know there's a fucking range here. At this point in time, I know there's a range here. Also, it's going to be a profile, right? So profiles and ranges go hand in hand. We've talked about this in the past. There you go. Perfect bell curve. Nice action. Obviously, there's more ranging behind us. Anyways, so in the case of a 30-second chart, we want to see bigger slips to really be hitting slip moves. And these are pretty tall slips. The market is just ripping many points on the ES up and down, like 4 points, more than 4 points. You're talking big fucking movements. So we know there's big movement. This is 60 tick move right here. And notice how tall these bars are. They're slipping. So what started as reclaims, they started slipping it. So they're just moving really fast, both directions, very violently. And we know that this section down here, this smaller range in this section has slip. Like it's moving fast. You can see these tall, fast bars in here. Sure, it compresses and gets tight in certain areas, but then it re-slips, tight, re-slips, tight, re-slips. Nice little puke. So same thing up here. Then they come down, they go tight again, and then they're re-slipping here. See how there's a tall bar here, 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 and here? Tall bar, tall bar, tall bar, tall bar, tall bar. That's all a slip zone. So I know that's a slip zone. I know there's a good chance that if we're going to... I don't want this shit on my backside. Let's just put it that way. Now, if other things in the trading system are like, hey, go short, then we'll go short. I just don't want to be taking this trade to take this fucking trade. There should be other context. So when it comes up here and it goes sideways, you know, if there's other levels up there, maybe there's like heavy low nodes or low nodes with low EV counts, and if this doesn't make sense, there's going to be other modules on low nodes. I've not done one yet. However, there will be. I talk about them in the coffee all the time. So if you want to know more about that, instead of waiting for a YouTube video, you can do that. Anyways, it depends what's happening up here. Is there a good gap? Is there a great gap somewhere in here? You know, what's going on? What's the correlations telling me? And if it points to a short, then I know that there's a good chance we could slip our way through this range. And we fucking do. Right? So, those of you who know what range stacks are, you can see there's a range up here and then there's a stack down here. Anyways... Again, puke, tall bar, puke, puke. This has that puke. You can see there's 3 green bars here. I kind of covered it up. I know my face is covering up a lot of this. Let me zoom in so you can see it. Tall. It kind of like runs up quick. Tall red bar here. 3 tall green bars here. They take it back. They kind of walk it and chop it back. Either way, this middle zone has the tall bars, so they're slipping this area. So I know this range could be a slip in the future. Huge puke. They take it back. So this tall bar, while slightly higher than these, it's still a potential good range to attempt to get in. Eventually, they start chopping and filling a lot of this shit in. But then again, there's another tall bar right there, that red. Another tall bar here. So they're still continuing to slip. And then they blow it all out because that's going to happen at some point. So, like, we can identify what they're doing. And then they blow it out hard. And then they just walk it down. Very quick, fast walk with great pullbacks. Micro range stacks, which again, that's a advanced price action technique, which I'll do in the future. So just understanding this. Now, the thing is, if you want to really see that hard puke, especially on the ES, like if it pukes like a point, you can kind of take advantage of it. But the risk to reward really isn't there compared to a 30-second chart where the bars are taller and you're looking at 40 tick swings essentially of this range. And we know it's got slip in the middle. So that's what the slip is. The slip is It's just when a reclaim just keeps on reclaiming at least 3 or more times, 2 times, yeah, we could lean into a second time, especially in this specific example where it does it a second time and then they compress it and they fill it all in. Yeah, there's micro shit here, but I want it to be kind of eye-catching. Like, when I'm looking at a 30-second chart, I want to really be able to see it. Like, it's very evident it's here. Like, it's very evident it's here. Like, in this little tight zone, not quite, but I can see, like, from here to here to here to here. Yeah, it's there. And then it continued right here, and then it continued here. And then they kind of getting a little goofy in here. It has the essence of slipping as well. For me, this is range stacking. So when I do roll out the range stack module, there's a stack, and then a stack. It's stacked like fucking Lego bricks. So there's a range on top of a range on top of a range. Just for future reference, when that module does roll out, or you can just look at coffee and watch me talk about it all the time. There's a good chance that at some point they're going to sweep through all of these stacks. They didn't go through the third stack up here, but they blew out this stack and this stack. Like, what was it? Last week we had a huge fucking down move. And on the 10-minute, we had a huge down move here. Same thing on the 10-minute. I know we're kind of sidetracking a little bit, but there's a stack, and a stack. So this down move, everybody thought some news happened. No, it's just price action, in my opinion. That's just how it moves. A lot of times people think news or yeah, it does help to some degree. However, when there's these big moves and shit, and I even called it out in the prep before it happened, and I even talked about a 270-something tick move before it happened, just so you know, it's there. And I'm not saying that I'm a god at calling shit out. It's just, it's ridiculous, like, once you understand price action, how not random it is and how you can kind of forecast things. Can you be wrong? Yes. Is actually finessing and getting in the trade, that's really one of the hardest parts, which you see me trading on the coffee. So you get to understand that part as well. But anyways, so when we look at these examples, I'm looking at this from the perspective of range stacks sweeping, which there's a few case study episodes on that. And there's a bunch of slip, and I talk about it during that narration episode as well. I'm like, this is all slip right here. And it's good slip. Like, it's good risk to reward ratio slip. Like, I mean, your 57 tick area where, it all looks like slip to me. Because when I'm watching the DOM, depending on how fast it's flowing and just how it's moving, and because the thing is with the order flow and the DOM, it's not necessarily about the order flow. It's the way it feels, the way it dances, the way it pauses, the way it gets skittish. It's the way it dances on the DOM. And I would say order flow is somewhat overrated. However, the DOM is not useless by any means. I've looked at it for so many years. It's just this feel thing, and it's the way it's dancing, moving, pausing. It's the way it's this feel thing. Order flow, yeah, it's great to an extent, and it helps. Like if I see some weird reloading or weird bids offers, that can keep me off to certain things. But anyways, I digress. So that is reclaims versus slips. Let's go ahead and watch the two trade examples from here to here. All right, guys. So again, this is, you can see all the slipping here. This is right before it starts to rip up. This is ES on the left, NQ on the right. So I'm going to be listening to the narration, and this is going to be, we're going to be going like fast forward through it. So bear with me. The trade will be put on in about 30 seconds, sir. So I go, the market is zipping up. So here's a view of all three markets. So Russell has a range here in this yellow box, and it's starting to break this. And what I also noticed was happening was as the market was going down, especially in these sections, the market just wasn't puking. It kept hitting like new lows. Like it hit a new, it hit a low up here, and it'd be easier to kind of look at the chart, but let's do that. So again, it's leading to these stacks. So the market, opens here, and then they puke it, but then they have a hard time, like, they don't break out all the way, and then they do break out, and then it doesn't go anywhere as far, right? Like this range up here is excruciatingly tall, then it's not as tall, then it's not as tall, and then they break this smaller range, and then it really is not puking very good at all. Like those ranges are getting smaller and smaller. And I notice as the market is going down, and this is again the way the DOM is dancing and stuff, I notice as the market is going down, it's just like, it's really shoving up. It's not puking up, but these like little micro shimmies in here, especially in this section. And this was both ES and NQ. Like, let's really zoom in on the bars right here. Like, they had a hard time, like, really getting it down. Then it would puke up, and then they really had a hard time. Then it was a slight puke up, and they had a hard time, and they would puke it up and have a really hard time walking, and puke it up, and a hard time walking it down, and then puke it up, and they finally could get it to go, and then they puke it up. So as it was going down, as the market was going down, it would have these, like, oh, I'm really tiny over here. As the market was going down, it would have these really, like, violent, quick shoves. Now, they were only worth, a point or two or whatever, a very small movement. However, when I'm seeing that and it keeps, like, repeating like that, that's a problem, and that's tipping me off to, like, first, like, the market is having a hard time, shoving the price down. And as we keep hitting these lows, they're just not puking it. Like, as the market, and this is kind of like another little side thing here, a side quest for you guys. As the market is having a hard time really shoving the market down, like the price is having a hard time really going down, and it just keeps kind of shimmying up really quick, but then it has a hard time going down, and it shimmies up real quick, like the offers are pulling. That to me is a sign there might need to be a big puke up. And they need to clear inventory. They need to clear a bunch of stops in order to bring the market back down and actually shove the lows. Because it's like a battering ram. I've talked about this in the past. If you're going to break a door down, you don't put the battering ram and just bounce it like this, right? You're not going to get through the door. That you have to eventually swing it really far back and jam it to actually get the door open. So that's the same thing with this price. Like, the price needs to, if it's having a really hard time breaking a specific level you think it should go through, then they're probably going to puke it and puke that inventory. And once they do that, if it's a really good puke and it starts to come back, like a hardcore puke, there's a good chance now they can finally get it through. And when I see that, that really adds an extra layer of confidence to getting into the trade. So that's what I notice is it's like they're just not puking it. And the thing is, we're in a high EV gap. This is an EV13 gap. So again, I have a gap video. It's in that playlist. All three markets are in a gap, by the way. EV13 gap, and it mid-rolled 3 times. And I'll do a video on these tags and stuff, and it's being accepted. So there's a high probability this yellow shaded area, which is off screen on NQ, should get completely traded through. Same thing with this yellow box to here. There's a high probability it should get all the way traded through. It has an EV13 mid-roll 1, almost target 1 acceptance. That for me, for a gap of that size, is a good probability. Like these tags are probabilities. There's a good probability they should get it through. But it's really not doing a good job, and these markets aren't offering me a clean open. Like, they keep diverging from each other. Like, ES was very sideways, while NQ had a range, and then it stacked up. So there's a range stack, and and they're just not agreeing with each other. Like there'd be times where NQ's trying to drift up, ES is sideways, and Russell is going down. And that typically leads to shitty price action. Watch the correlation videos, guys, if you want to know more about that. However, when I'm explaining this slip and reclaim thing to you, it all ties with everything else, so you know. So there's an EV6 here. They blow it out. So this white box is gone. That's a PVA. I talk about those white boxes in the volume profile part of the modules. So if you want to know what that is. Then we have these low nodes, which I've yet to do a video. Check in the future. There should be a video, but these are major composite low nodes. So there's an EV9 up here. There's an EV13 here, and we're below this EV13. So I have an EV13 low node crossover, an EV13 gap. I have an EV13 gap on ES, an EV9 low node, and there's some other stuff going on in Russell. When that shows up, I'll show you. So there's a huge combination of reasons for the market to go down. However, the market is just having a really hard time to go down. I would have loved to have been in the short, and I just couldn't find an entry. And I just was so skeptical of it actually like going. So now the market starts ripping at this point. So now they're unwinding all of this shit, which needs to happen. This is a very unusual zip up. And here's Russell. It's an EV19 gap, which it should be hitting this target. And then there's a white box from here down to here, which is EV10 at the time or some shit like that. I can't even read. It has 4 mid-rolls on it. So a lot of these setups tend to overlay, and when they overlay like that, they'll combo into each other. So when I talk about a combo run, that's what that is. Anyways, so I realize they're unwinding, and I realize what I showed you guys earlier is there's a huge slip area up above us. And there's a bunch of stacks, so they could blow the stacks, which, again, that's going to be another module. But as far as slips and reclaims, I know there's slip zones above us. So look, a little pullback right there. Just being very patient. I know 60 got stuck. 60 is a sticky area, so I'm looking to hit somewhere in here. I don't like to hit the market on a straight run without some sort of pullback. So now I'm just feeling the flow and the dance of the DOM at this point. So we get in right there, and then rapidly clearing the market orders in the middle because it's something called snapshotting. Whole nother video. And it's allowing me to read order flow in a kind of weird way. So I'm rapidly clearing those market orders. So it is stalling quite a bit, but I'm snapshotting, and I can see there's larger bids and offers hitting. Like 97 is hitting right there. There's a 31. Then I keep rapidly clearing. There's 130 versus 40. I know it's really fast. The point of the video is not snapshotting. I see a 150, an 81, a 200, a 123. And the thing is, they're hitting bigger orders on the upside. So that's just kind of a brief thing on like snapshotting. And then there's a stall there, and I decide to take some off right there. And then we get flat right up there near the 66. It's kind of a higher node. Also, if you see the price action here, it is at the gap edge. So I'm not sure if they're going to roll that gap edge right there. And then Russell's kind of near the midpoint at the profile, like the point of control of the intraday profiles. There could be a mid-roll there. There's a few reasons for the market to potentially roll right there. So I don't usually take trades like that. This just happened to be one of those circumstances because you don't get these rapid unwinds every fucking day or every week. So today just happened to be one of those days where I get to actually do a video on this shit because today was a prime example of slips and range reclaims. Sometimes the market is not doing this type of behavior. So let's go ahead and look at the next trade, which will be the short. So again, we just looked at that one on the upside. We're going to look at this one on the downside. Also, I suggest reviewing your own footage at 2x speed if you're recording the YouTube, because it allows you to just, you're reading it at such a fast pace that it'll help you in an actual environment. So now, so there's something called a so they're range stacking lower, and I'm starting to see the pivot. I'm like, okay, there's big reclaims down here. We're all the way up here. Here's Russell. So Russell's starting to pivot, and we can see that there is a, from this red line over, which I'm just referencing, it's a low node. It has nothing to do with the current price action because it was there before this current price action. It's a EV2, again, EV19 accepted gap. That tag could be a bit higher. However, again, all three markets are in gaps, really good size gaps, and that doesn't always happen. And they did an inventory flush up. I'm not sure if they're necessarily going to sustain a down move from this point forward. That's where that big trade at the end of the session comes in play. This one here, that's when I finally realized they're going to start to break. This happens near the low of the session. I'll briefly talk about that. However, for me, it's like this is a slip zone, man. Look how there's a tall bar here, which kind of aligns with this one. Same thing, kind of like these tall, fast bars roughly in this section, so they could reclaim it back down. Also, this is this is Russell, by the way. And it's near the top of a range. There's this micro range up here. Now they're putting a micro range right here. So I'm just starting to talk about stacks. Here's NQ, which looks like it's starting to stack low. Again, when that module comes out, look for that module, and then you can come back, and this will make more sense. They're starting to stack low here as well. There's a range stack, range stack. So I got a three-way range stack. It sort of looks across all three markets. That's a sign of a potential reversal. Again, that's a different advanced price action. So I say we could probably get short on this. This gap is such a high count. EV15, mid-roll 4. Again, there's a module on gaps, and we're on the edge of a gap on NQ. With an EV6 low node, in fact, those tags might be a bit higher. So it's a combination of range stacks, slips, reclaims, and high EV counted gaps. So it's a system, a trading system, not just slips and reclaims. So I'll be putting on the trade here in just a moment. So we're getting in here. We have range advantage. As you can see, the POC, the volume point and control intraday, is directly below me across all three markets. Again, in the range module, I talk about range advantage. You want to have the range working for you. Well, also in the profile video, I talk about that as far as profiles go, because ranges and profiles can misalign. If I can get ranges and profiles to marry up, that's even better. And I have the gravitational force of the POCs working in my favor here, or the higher, lumpier parts of the profile. So I have range advantage. If I was getting short in the middle here or just under it, I would be at range disadvantage. So I'm working against gravity. I want to work with gravity most of the time. I want to be going into the center of a range or the center of a profile. If they're misaligned, that's dissonance. If they're aligned, that's confluence. And again, we got a gap edge at play. So I said I'm going to be very aggressive about our scales here. I say we're going to take it off when momentum slows, which will be here. You can see it puked, stalled, puked. Because at this point, I'm not really sure if they're going to, like, I know that it's so reclaiming at this point. They're probably going to eventually fill in. I know we're in the middle of bigger ranges, and I know they're probably going to, like, start to tighten these legs up and form that pennant. formation I showed you on the ES chart, which I'll show you again. So at this point, I'm anticipating something like this. Where exactly is that going to happen? I don't know. I don't know if it's going to happen like, you know, here and do it up here or whatever. I'm anticipating this wind up pennant tightening happening because we keep puking both ways, and that was one hell of a puke. And I know at some point it's going to get tighter and tighter. And the first initial waves of these ranges are the best trades, and the more you start hitting it on the edges, the worse it's going to get. Like, you're not going to get as much for them. So I'm anticipating it getting tighter. So unlike this one where I was all in, all out, I'm going to be more aggressive about actually getting out of this, especially since I greased the fuck out of the entry. Both have greased up entries, to be honest. Let's continue. So I'm saying this looks like a reversal because of the stacks across all markets, but I don't know how shaky it's going to be. That's what I'm saying at this point. So I say I'm going to hold the rest. That's Russell, NQ, ES left. They could just bring it back. These POC, again, you're working against gravity. So I can get in with great momentum. The problem is it coming out the bottom end. It keep getting sucked in. So I want to like probably scalp this is what I'm thinking, you know, at this. So now the price action is getting a little goofy. So at this point, I'm not quite sure. Let's keep watching it. So I'm taking it. So I say if I don't get filled here, I'm going to cancel that. This is a bonus side quest, I guess. If they don't immediately fill a target like that, there's a good chance that if it starts floating above it, if they revisit that 70-25, there's a good chance they're going to push it through. So I decide I'm going to end up getting rid of it. Same thing if it's like on the backside and you're trying to break even. You got to be wary of these things. So there they go. They press it further. So I take 2. I say I might ride the rest, break even. So at this point, I'm also concerned because this is in a bigger, broader range at this point. And we hit the range bottom on all 3 markets. And I don't know if we're going to stay full neutral and if they're going to compress and go up. So, but you can see they're taking a lot of that slip back right there, that reclaim. But they're filling it. They're walking it down. You see it puked even further in my favor. Again, they're taking... Russell has a little reclaim. You can barely see they took that back. Yes, there's a bigger section down there, but again, I'm anticipating it going sideways. So I say at that point, it's too good of a momentum trade. I'm just going to get out because I'm really not quite sure. So hopefully, I know that's a lot. I know that was complex when you're watching the actual like trades and stuff. Hopefully you understand the theory. I encourage you to just notice these things as the sessions play out. And that's the reason I have hundreds of hours of videos on the coffee, because this is a lot to comprehend and put together when you're looking at what I'm doing. Now, you can take the slips and reclaims and use them in your own trading system. You can most certainly do that. Take what I do that you like, that complements your trading system or can help it. However, those of you who really want to know exactly what I'm doing and how I put all this shit together, you got to see ongoing case studies. It's like putting your mouth on the fire hydrant. I know it's a lot. However, as you continuously see these things in different scenarios, the same things in different scenarios, the slips, the reclaims, the gaps, the PVAs or the value areas of profiles, the low nodes, the range stacks, as you continue to see this combo flushes, all this shit, as you continue to see this shit over and over, eventually it just starts to click. Because this is a skill-based job. It takes a very long time. It takes a very long time to really get good at it, right? And I'm getting better as the days go on. I'm getting way better at holding. For me, holding has been one of the hardest things because I'll tell you, even in the last year, I've let so many trades come back. And it's taken years and years and years to really learn a proper hold and shit. So versus scalp and all that. And hopefully the slip reclaim phenomenon is going to allow you to know when you may want to just scalp the fucking shit versus like holding and shit. All right, guys, I hope you enjoyed that. Check out the playlist to see the other videos in it. And we'll see you in the next one.